Hello, everyone, and welcome to a new episode of ADSS Talk. There is a lot to cover today as we move into Q4. More rate cuts from global central banks, geopolitical tensions, and all time high in the stock market. And I'm excited to welcome back our head of sales trading, Neal Keane. Well, hello, Neal. How are you?
I'm very good, Mahmoud. How are you?
I'm pretty good, thank you very much. Well, we've been seeing a lot going on in the market. We've seen the S&P 500 rallying to an over all-time high, and also the Chinese stocks been rallying over 20%. But on the other hand, we've seen the Middle East escalating tensions. So, do you think that the risk-on sentiment is going to carry on amid these circumstances?
Hard to say. I would say my first instinct there would be unlikely. We've had huge moves, as you've said. US markets up about 20% year to date. We've had a massive stimulus from China, which you've seen Chinese equities up over 20% in 1 week. Can that continue? Questionable. More recently, we've seen the escalating tension in the Middle East, and that really has the potential to become a bigger issue, and markets may struggle to ignore that. I think we've had the support from the outsized 50 basis point cut from the Fed. Chair Powell spoke earlier on this week and seemed to walk back some market expectations in terms of another 50 basis point cut. So that's another thing. Maybe we're not going to get the extent of cuts as markets had expected. We have a number of risks, not least we have earnings seasons coming up in the coming weeks. So I think if we see any slowdown there also, we could be due a pullback in risk overall. The stock market has already had a very good year, so we're probably overdue some more two-way action.
Okay, so since you talked about the Federal Reserve meeting, the last Fed meeting, we've seen that the Federal Reserve has cut by 50 basis points and delivered according to the market expectations. And right now, we've seen that the market has already priced in nearly 75 basis points. So do you think that the Federal Reserve could deliver again according to the market expectations, i.e. 75 basis points until the end of the year?
No, I don't think that's the most likely outcome. I think after listening to what Powell said in his speech, I think he's trying to walk back some of those expectations, and it's more likely now we'll see a 25 cut in November and a 25 cut in December. There's no question they're going to cut essentially every time they meet for the foreseeable future, but I think another 50 cut would be excessive based on the data that we've seen since their last meeting. And yeah, I think they've started maybe a little bit slower than other central banks, but I think a 50 basis point cut to begin with is sufficient.
So talking about the data, on Friday we are expecting the NFP report in the US, and according to expectations, we expect that the US economy could add between 125,000 to 150,000 new jobs, and also a stabilized unemployment levels at 4.2%. So how do you think that the market might react if we have a weaker than expected data?
Well, I think we'll have a sell-off. I think any kind of weakening in jobs data has seen outsized moves, and I think that's going to continue.
Mm-hmm.
A number below that consensus, 120k, below 100k, is likely to be met with some sort of a mild panic that we're having a bit of a contraction in the jobs market. There will be more talk of this is the type of catalyst that could generate more anticipation of another 50 cut in November, and vice versa. If we exceed consensus, we could probably start to eliminate the chance of that outsized cut in November, and risk might take a breather with that, inline jobs number, soft landing, and I think we could continue to rally on from there.
Makes sense. So let's move to the euro. The ECB also, after the, let's just say, positive inflation data that dropped from 2.2% to 1.8%. So we have more probability of more rate cuts coming in the future. So the market also, as we said, has been pricing in more than expected rate cut, i.e. 75 basis points for the ECB. But yet, the euro dollar is still strong and above 110. Do you think that this level might be breached anytime soon?
I think it could. We came close earlier on this week as we had a bit of a dollar reaction to escalating conflict. So absolutely we could breach it. I mean, the euro's in this 110, 112 range in recent weeks. We tested 112 after the Fed's outsized cut. But overall, I think the euro will probably be a buy on dips into year end. going back to the ECB, again, it seems like some of those expectations are a little bit ahead of themselves. Listening to the comments from ECB officials, it seems like they're taking things on a meeting by meeting basis. And again, a 25 cut in October and December seems far more likely to me than a 50 cut. There's no need to do that. They've started ahead of the Fed, and there's no need for that kind of a panic reaction.
So moving to the Japanese yen, recently the USD JPY has tested the 140 and then rebounded. Do you think that this level could be retested anytime soon?
I think inevitably that 140 level will probably be breached and give way. And we had a very interesting move last week when a new hawkish PM was elected in Japan. We saw dollar yen move from 146 to 143 in a matter of minutes, giving an indication of how traders expect, or what they would expect from this new leadership. He has commentated in the past on the preference for more rate hikes and the need for Japan to normalize. They've kept rates at zero for decades now.
Mm-hmm.
So yeah, I think we could see potentially a rate hike from the BOJ December, January, possibly January of next year. And I think dollar yen will eventually probably test that 140 level.
So moving to my favorite part, the precious metals section. So as you know, that gold was one of the best performers in 2024, nearly 30% year to date. So do you think that gold might hit any new records anytime soon?
Well, we're very close to a record high as we speak. And I think there's a lot of things supporting gold at current levels, massive central bank buying, the imminent rate cuts we can expect from global central banks, weakening dollar, as we've discussed already. So any further escalation, I think, in geopolitical tensions is another thing that will boost it. So further all-time highs, I would think, look highly likely for now. And I would say a move towards $3,000 an ounce, if all things being equal, we continue in this vein into year end, is possible. It's only another $300 odd from here.
3,000?
Yeah, possible. I mean, look.
So apart from gold, what are the most frequent questions that you are continue receiving on the ADSS trading desk?
I mean, we're in contact with clients on a daily basis about all the major topics, from the all-time highs in the stock market. Very interesting move last week in Chinese equities, where we had this massive gain of about 20% in just over a week, and continues to move higher. So there's a lot of clients kind of caught wrong-footed or confused by the aggression of some of the moves. We have daily discussions on escalating geopolitical tensions. I think we've seen massive moves in oil and gold, for example. We're getting a lot of headlines coming through the various news terminals, and that's one of the things we try and do on the sales trading desk. Is we see a headline or we see a big move in anything, we will try and spread that news across our social media channels on X, on Telegram, helping clients be aware of what's going on at all times.
Well, brilliant. Thank you very much for joining me, and I'm looking forward to seeing you again.
Happy to see you again, Mahmoud, anytime.
Well, that's all for today. Don't miss out our next episode, where we'll discuss the latest market development. Be sure to subscribe and follow us on social media. And if you have any question, please share them with us on ts@adss.com. Thank you for listening, and see you in the next episode. Stay safe and trade wisely.